Welcome back to Trading with CJ. Now, it's been a little while since I showed you how this high risk portfolio is getting along. I started it around about mid-June when a lot of these stocks had shot up, so I did get in at quite high prices, and then we did go on to see a sell-off in a lot of these riskier sectors afterwards. So if you want to see episode 1, which is my initial investments and the whole reasoning behind this portfolio, feel free to check that out. I'll leave that in the link in the description below. And then in episode 2, I added 2 new stocks as well to the portfolio, and that was thanks to your suggestions and then of course the research that followed. So where are we at today? Well, we have the full £1,000 invested, and one more stock was added to this portfolio. And that was a stock that was actually suggested by you guys in the previous video as well, and it's one that I hold in my personal portfolios as well. Now, I'll give you some clues. It is probably the most talked about stock on the market right now. The growth has been absolutely huge, and this stock could definitely be classed as speculative at its current price. That's right, we are talking about Tesla. Now, I bought in on Tesla before the stock split, and in this portfolio we own 1.01 shares, and at the time of recording we are already up over 36%. So without further ado, let's jump into the portfolio and have a look at where we're at right now. Last time you saw this portfolio, we was down 6.61%. I'm going to put that just there, 6.61% down. And now at the time of recording, we are plus 13.44%. And that is pretty much down to 2 stocks at the moment, which is Tesla, as I just mentioned, and Tortoise Acquisition, which is going to be merging and becoming Helion. We're up about 75% on that at the moment, and it was actually over 100% at one point. It has had a slight drop off recently. Now, I mentioned about this company. This is the one I added in episode 2. I go into a lot more detail in that video, so if you want to, feel free to check that out. The link is in the description below. So let's take a look at how the rest of this portfolio is coming along. And like I said before, I don't expect to see any real movement on most of these stocks, as they are in sectors that have been hit really hard, so travel, leisure, energy, etc. So it's going to take a lot longer for them to actually recover. So I'm going to run through the stocks in this portfolio. It's been a little while since I've done an update on this. So the first 2 here are actually Barclays and BP. Both of these 2 were in my How to Invest £100 video. So if you want to check that out, the link is in the description below. And I haven't touched them since, because obviously I wanted to keep it separate to see how they grow over time with just a £100 investment. And you can see that Barclays is currently up 6.9%. It was actually a lot higher. It was around about 20 or so percent, I think. But it has seen a slight sell-off. But nevertheless, it is still up 6.9%, and there's still a way to go to recovery. It's a bank, so it's going to take quite a while. And then the other one here is BP. And BP, if you're not familiar with BP, it's an energy company, one of the biggest ones in the UK, and it is pretty much at all-time lows unless you bought the day of the crash. Right now, anybody who's holding BP is most likely down on their position, because it's actually the lowest it's been. This is the lowest it's been since, I think it's like 1995, something like that. So the chances are, if you're holding in BP right now, you are down. However, the good thing about BP is they are trying to look at different ways of innovating, coming up with like renewable energy sources and stuff like this. And energy at the end of the day, it will bounce back. It's probably not going to be a long-term thing. I'm not going to hold these forever. But I do think there'll be a nice bounce back. But at the moment, obviously, they are definitely struggling. Moving on to the next 2 in this portfolio, and that is Carnival. I hold both the US and the UK one. They both mirror each other pretty much in terms of the graph and how the shares are performing. And as you can see, they are both down. I bought in at these actually when they were starting to rise. So if we look at the 3-month graph here, you can just about see it. If we go into the 1 year actually, you can see here where I bought in just on this rise, and then obviously there was a sell-off. And it did go down a lot further, and as of late it has started to recover. So we're only down 12%, but this is one of my largest holdings even in my personal portfolio. So I do think CCL will come back. They're obviously a cruise line, and once they start being able to properly operate again, you know, then hopefully they will start to recover. Because you can see the graph was doing pretty well, but they've been hit hard. Probably been hit one of the hardest, like most travel and leisure stocks. So that's going to be a slow recovery for CCL. Next up in this is actually Delta Airlines. Delta Airlines is an airlines company in the US. 3 shares of these. I actually added another share since the previous video. And we're currently up 6.26%. And once again, that's only just as of late. You know, it's been sitting down around about $25 mark. and now we're at $32 per share. So starting to see a slow recovery, but as you can see where it was trading at 1 year ago, you know, it's still down 45% from where it was 1 year ago. So a long way to go to get anywhere back to those levels, and we probably won't be seeing it soon. However, we are up in the green, and I can only expect that to go further up in the green over time. So next up is EasyJet. EasyJet was the third company in that how to invest £100 video, so I've not touched it since. And as you can see, it's actually doing pretty well. It is up 19.37%. We can look at the 1 year graph here. Slowly started to see that recovery. It's going to take a lot of while. If we go on the 3 months, you know, it did actually hit 800 pence, so £8 per share at one point, and it's dropped off again to £5.93. But the average cost basis on that is actually £4.96, so pretty good price, and I have really good faith in this company that it's going to recover and will be getting me a nice return. So moving on to, this is a very small position, Hollywood Bowl. I'm not going to talk too much about this, and actually let me cover IAG as well. So Hollywood Bowl is only £11, and this is obviously a bowling alley company, but also have restaurants and bars and stuff in the UK. We're down 9% on that. This is a growing company. It had a very good balance sheet heading in to before the pandemic, and you can see the growth here. Look, just growing and growing. So it's been hit hard, but once, you know, people can start going out and spending money on entertainment, I think this will recover. Only a small position. We're probably looking to add to that in the future. IAG, this is one to, you know, that's just been hit massively. We're down 46% as of today. Actually, you look at the one day here, 30%. This is obviously at the time of recording, down 30% today. This is due to the rights issue that's come out and the public offering. So this is probably a position I probably will sell out of. Only a very small position, £9 in it at the moment. Obviously it was about £17, something like that. So I'm not too bothered. I'll probably put this money into one of the other airlines or something like that. But yeah, we are down 46%. It's British Airways, and that's to do mainly with today, to be honest, with the massive rights issue and public offering that came out. So then we've got Park Hotels and Resorts. This is a US company. It's a US real estate company, obviously managing hotels and resorts. And we're up actually in this position, 2.82%. This is as of very late. I think it was with this week we started to go up. Yeah, so we literally just crossed it yesterday, and we're currently up in the green, plus £1.17. But once people can start traveling and going to hotels, and it becomes a more regular thing, I do think, you know, their books will start looking good. They're probably a position I may even add some more to. We've got 5 shares in these at the moment as well. And then we've got Royal Dutch Shell, another energy company, and obviously following the lead of BP there, it is down massively, pretty much at lows, some of the lowest it's ever been as well. Energy just is getting hit hard, and there's only £20 in this, was 25. So we are down 20% at the moment. Once again, I do think energy will recover, but it's not something I want to be in for a very, very long time, unless it's like an EV play or something like that. So next position here is one that I've already spoke about, and that was Tesla. As of today, this is probably going to change by the next time you see this, but that's because it's such a volatile stock. You look at today's graph, up 12.6% today alone at the time of recording this video, and we are at 36.25%. At one point, that was like 50% in the last month, especially when it hit up here. It got to about $500 per share. Then there was a big sell-off, and now we're starting to recover again. It's a very, very volatile stock. It's one that I will continue to add to. It's one of my largest positions in my main portfolio as well. I have huge faith in this company, and the 1 year graph is just pretty incredible. The growth since May here, I think pretty much, or March actually, since March, it's just been growing and growing at absolutely exponential rates. It's definitely speculative at this price, but you know, this is one for the future for sure. That brings us on to Tulsa's acquisition, also known as Shell, or merging with Helion. The merger is announced very soon, so I'm surprised we are seeing a bit of a sell-off at the moment, 9% down today, but this is a company that has been on a massive run, and it went up to prices there about $55 per share. I've got a nice average price on this one of $24 per share. Returns currently sitting at 74%, and we was, as of literally yesterday, I was at about 100% return, so it has dropped off a little bit today, but this is a company that I'll be very surprised if after the merger it doesn't shoot up even more, maybe a sell-off. But it's one for the future. It's an EV play, and if I do add more money to this particular portfolio, I will probably be adding to this position. So a couple more to go through, and moving on to TUI. TUI is the big leisure travel company all around the EU. It's actually a German stock, and we are down 16.87%. I did get in these at a very high price actually. I know they was on the up when I bought in, so I'm not surprised to see these down, but I didn't buy this for a quick buck. I bought this, you know, for a long-term hold, so, well, you know, at least a few years anyway, to get some nice profits out of this company. Travel is always going to be around. People are going to be wanting to go on holiday, and next year, you know, if the situation gets itself sorted out a little bit more, I won't be surprised to see this company absolutely take off and get me some nice returns and to eventually get back in that green. Next up, just hitting profit today. Actually, this is another very volatile stock at the moment, and this is Virgin Galactic, the space travel company. I covered a lot about these in the previous episode, episode 2, so I'm not going to go into too much here, but if you want to see that, check it out. Link is in the description below. 4.7 shares I added to it since the previous video, and another one that I will be happily adding more and more to if I put more in this portfolio. It's very volatile. We was looking at a nice little profit there when it hit about $18. I think it might even be more than that at some point. No, about 18. But yeah, there was a sell-off there, and 15. Now it's started to recover, so we are just about in profit, pretty much breaking even. But this is not a company that's going to be making profit anytime soon. This is a company, you know, they're looking to send people to space. It's going to be a long haul, but hopefully it's one for the future for sure. And the last company up here is a company called Whitbread. This is basically Premier Inn, which is a hotel, and some restaurant chains like Brewers Fayre and etc. like that. And obviously, goes without saying, hotels and restaurants was hit massively, so it's down, and we're only down 3.5%. This is another one that's been a bit up and down actually since I invested into it. You can see the graph here, just up and down, but hopefully this will sort itself out and start to just go up in the future. So like I say, that is my investments. There's currently just show you on here 15 different investments. You can see the allocation here. Tesla is obviously the largest one by far, and that's obviously to do with the profits as well, same as Total Acquisition. And then we've got the smaller ones down the bottom, less than 1%. I will monitor some of the others and may sell out of a couple of the others, may add to the other positions. But for now, the £1,000 is fully invested, so I'm happy with this. And we're going to see how it gets on. You know, like I say, this is going to be, it's a high risk portfolio for a reason. These are companies that at the moment they are very risky, but should things go well, there's a nice chance for profit. And I'll be very surprised if all of these, if not the majority of these, are all in the green this time next year for sure, getting me nice returns as well. We actually did hit, I think it was about, where is it here, yeah, we was at 16.86% actually on the 3rd of September, so that was pretty good. And then obviously there was a slight drop off, and now we're back to 13.5. Be interesting to see where we're at on the next update. The slightest bit of news on any of these could shoot this up or down, and obviously, you know, it literally takes one tweet from Elon for Tesla to fly, or something to go wrong with the merger for this one. So they are definitely risky companies, but I do think we'll be seeing a nice returns in the future. So that's the portfolio as it stands. 15 investments at the moment, and that's the full £1,000 invested. We may add to that over time, but for now it is a £1,000 portfolio. And we don't have your Facebooks, your Apples, etc. Most people probably will have those, so their portfolios are looking really good and probably all in the green at the moment. The closest to that is probably Tesla, which you could argue that at its current price, it is still a fairly speculative play. But what we do have here is a portfolio full of high risk stocks, which are going to take a lot longer to recover, but hopefully in the future, the gains on these will be very nice indeed. Now, before we wrap this up, I do want to say that I'm not a financial advisor, so any stocks mentioned in this video, they are not necessarily recommendations. You should always do your own research first. And if you found this video interesting, or you want to see more updates on this high risk portfolio, please be sure to hit the like and subscribe to my channel if you haven't already. It is greatly appreciated. Thanks for watching, and until next time.